What is up, you guys? Thanks so much for joining me today. It's your boy, the Finance Bro, and in this video, we're going to be taking a look at shares of IBM. They've been in the news recently. We'll take a look at some fundamental and technical metrics to see if this is a good entry point for shares of IBM today. As always, this video is not investment or financial advice and is solely for entertainment purposes. All values that you'll see within this video are as of market close on May 28th, 2026. So let's dive right in here to the past 12-month price chart for IBM shares. You can see within that time frame, IBM shares underperformed the benchmark, in this case the S&P 500, by negative 25.7%. Shares of IBM also lagged year to date the S&P 500, which has produced an almost 10% return, whereas IBM shares are down still almost 11% after the most recent share price surge. But on a 1 month and 1 week basis, we can see that shares have significantly outperformed the S&P 500. In that top graph there, we can see that shares over the past 52 weeks, they're trading in the middle of that range. After the most recent share price surge, we can see that IBM shares are now trading above that green line, which is that 50-day moving average, and almost going to pass that 200-day moving average in the orange. I do believe the market has not fully priced in the positive news that's come out over the past couple of weeks, with IBM being a beneficiary of government grants to the tune of $1 billion and also allocating their own $1 billion towards research and development to match that government grant. So I do believe that there is still significant room to grow in IBM shares, which over the coming weeks and months, we should see that 50-day moving average start to converge and trade above the 200-day moving average, which does indicate a technical buy signal. Few key items here I want to point your attention to. We can see that amazing earnings per share growth over the past 5 years and projected to continue to grow through 26 and 27. I will say that some of these projections still have not been revised upwards after the most recent news that's come out with IBM with that government grants and potential for more direct government investing, kind of like what happened with Intel last year. Whether analysts believe that or the slowness that comes out of producing new projections and price targets, whether it would be compliance issues or so forth, I believe analysts are still slow to revise upwards their earnings per share. And also, we'll touch on this on the next snippet, their target prices. And we can see over the past year, sales have grown only 9.7%. Over the past 10 years, we could split the company history into two stories. The first 5 years in that 10-year trend, sales, margins, and everything were on the decline. But over the most recent 5 years, everything has started to trend in the right direction. And that has really been because IBM is a beneficiary of a lot of these AI build-out and CapEx dollars, just like Oracle and Microsoft is, that we touched on in previous videos. But we can see their gross margins continuing to trend in the right direction. Last year had a almost 60% gross margin, EBITDA margins looking healthy, net margins at 15.6%. Now, why this is such positive news with the government grants is that money can be allocated towards research and development, and IBM is not having to take that money out of their own pocket in a sense. So we should see these margins expand and also the returns on equity expand as well, which is also, want to mention, very healthy at 35.9%. With all that cash, IBM is one of the few technology companies paying a dividend, in this case a $6.76 annual dividend, which does equate to a 2.6% dividend yield as of market close on May 28th, 2026. And when we even look at a few valuation metrics, look at the past 12-month PE ratio at 23.4, the forward PE at 20.6, price to sales at 3.7, even price to book at 7.5 is not screaming an overvaluation whatsoever. This is also after the recent share price run up and with the positive news that I believe will benefit IBM over the coming quarters is not priced into the name and the market is discounting IBM shares. Currently, in my opinion, there are almost 20 analysts who have target prices on IBM shares. They do have an average price target of $280.78. That does imply just north of a 6% return. Most bearish analysts have shares being cut by 26.2%, and the most bullish analysts having shares appreciate by 26.79%. A lot of analysts are slow right now to release their target prices, but the trends so far over the past coming weeks, with the few ratings that have been revised, they have been revised on the upward. We can see there in February a dip in share price and a dip in target prices as well. That was just due to the Q1 earnings release that had poorer than expected guidance. Let's see over the coming weeks how analysts will increase their target prices. I do believe they are mispricing IBM right now. And when you're looking at the valuation trends over the past 5 years, you're almost in line with the average. Look at that forward PE. 17 is the average. It's currently at a 20.6. Nothing that is exuberant by any means. So let's see if shares continue to run up and we have coming quarters and earnings releases that are disappointments, then we can have these valuation metrics go in the wrong direction. Let's see how that plays out. And when we compare IBM to its peers, we've already touched on Oracle and Microsoft in previous videos. Personally, I do believe Oracle and Microsoft are much better investments than IBM, so go take a look at those videos. The thesis in those videos still stands today. I know they came out a few weeks ago, but especially with Microsoft, shares are being heavily punished by the market. I think there needs to be a repricing and a re-rating in Microsoft shares, and we've seen a lot of insider buying, and same with Oracle as well. But for the sake of this video, we'll touch on IBM. And IBM is currently trading slightly at a cheaper discount to both Oracle and Microsoft. And right here, you can see those profitability ratios and all those trends in the right direction. Like I said, the most recent 5 years trends are in the right direction. And that is just because of, like we mentioned before, the AI infrastructure build out. IBM and Oracle are really the two main players in the hardware space that are going to be beneficiaries of this and are beneficiaries of this currently. We're seeing net margins expand, and this recent news should expand margins as well. Let's see how that comes to fruition through 2026, and healthy returns on assets, equity, total capital, and invested capital as well, which as well I do believe will continue to trend in the right direction and have a big boom in 2026 with that government grant and potential for more direct investment and government grants as well throughout the year. And like I mentioned, there is operational efficiencies that we're seeing within IBM with that revenue per employee continuing to trend in the right direction over the past 5 years. And when we look at financial statements, this is what I'm talking about in terms of the two different stories of IBM. First 5 years in the 10-year trend, things were going in the wrong direction. It's funny how things can change so drastically. IBM was looked at as a dying company, and now they're an essential player in the AI space, and we are starting to see those revenues, the gross income, operating income continuing to trend in the right direction. And that's why when we look at those 5 and 10-year compounded annual growth rates, the 5-year CAGRs do look better and should continue to move in the right direction through 26 and 27, as capex from all the mega players is not projected to stop until at least 2028, and that should transpire to earnings per share expansions. Look at that as an example on the diluted earnings per share on a 5-year compounded annual growth rate of 12.4%, but when we look at it on a 10-year basis, it's on a negative 1.9%. So demand for the products and services that IBM offers is in more demand today than it has been over the past 10 years. And a very important part of IBM, I believe, future growth is its international expansion. That US decline, I want to mention, I think will trend in the positive direction. I believe IBM now, with this closer support from the Trump administration, will result in more revenue coming from the US. The France revenue that you can see almost doubling over the past year is because of expiring contracts. For example, the BNP, France's largest bank, renewing their contract with IBM, actually going from 8 years to 10 years. IBM has a very sticky business with its customers, which are Fortune 500 and essentially some of the world's largest companies, which does embed them into long-term contracts, which does mean solid and steady reoccurring revenue. And this is a segment snapshot of IBM software and consulting. You're not looking to see large growth year over year, but that infrastructure and financing growth is going to be very important for IBM. It's kind of going back to their roots in the infrastructure space, that is the servers and computing power that's needed in a lot of these servers that are being built out globally, and the financing of a lot of these startups. For example, OpenAI offering those financing options for these large products will be a very lucrative and high margin business for IBM long term. So here's a few key bullish points for IBM that I believe are important for investors to know today. And we'll start with the strategic focus on AI. IBM is, like I mentioned previously, viewed as a key player in the AI revolution. Its integrated technology stack, which spans consulting services to infrastructure, like we saw in the previous snippets segment snapshot, makes IBM a differentiator that helps enterprise clients implement AI solutions more effectively. And the company's continued investment in hybrid cloud technology, largely bolstered by its Red Hat acquisition, remains a cornerstone of its long-term growth strategy. Analysts often point to this as a sustainable competitive advantage in a digital transformation-heavy market. Quantum computing has always been a buzzword, really for the past 15 years, but has gained a lot of momentum recently. IBM has signaled plans to invest over $10 billion in quantum computing research, development, and ecosystem growth over the next 5 years. This long-term commitment to what is widely considered a next-generation technology is a significant driver of investment enthusiasm and sentiment regarding the company's future innovation pipeline. This government backing that I've been mentioning is that $1 billion in quantum computing grants from the US Department of Commerce. And this funding is earmarked for the establishment of a new quantum foundry subsidiary, internally referred to as Anderson. The facility will focus on manufacturing high-grade 300mm superconducting quantum wafers. This is a critical step in the US's national strategy to lead in quantum computing, aiming to solve the massive engineering hurdles currently preventing large-scale quantum systems. And like I mentioned, IBM is matching this funding with $1 billion of its own capital, bringing the total investment for this specific project alone to $2 billion. This type of public-private partnership is a significant indicator of the government's reliance on IBM's infrastructure to achieve long-term technological goals. This has many benefits for IBM long-term, reducing their research and demand burdens that has plagued the company for the past 20 years. Being named as a primary partner in a federally backed quantum foundry cements IBM's status as a critical player in national security and economic infrastructure. This creates a moat that's difficult for smaller competitors to replicate. And the market, I don't believe, has rewarded that. The solid news that's come out with this quantum computing grant. There's strong fundamentals still in IBM. Technicals are starting to move in the right direction as well. Let's see how this will play out for investors long term. As always, this is not investment or financial advice. Please do hit that like and subscribe button, guys. It does mean a lot to me. And stay tuned for the next video.